What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on BABA stock.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on the price chart and how we caught to the tick this movement, this bounce from this range of resistance, then again movement to the upside, bounce from this sloping line and movement to the downside. Then I will continue with the fundamental news. I will show you why this asset, despite quite good news, has this quite harsh rejection from the level of resistance. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you what should we expect next. So let's start with the price chart. I made my previous video right here, at this point, when this asset hit the range of resistance that I marked previously. And for those of you who follow my channel for quite some time, you know that when I draw the lines, I didn't remove it until this line becomes completely irrelevant. And as you can see, this line was a very good range of resistance and of support right here. And it is the previous bottom and top of certain price actions. And that is how I define this line as the range of resistance. And at this point, I've told you that most likely we have to see the retracement to unload this movement to the upside. Then we have to retest this sloping line as the range of resistance as well. And probably we might see the movement to the downside. And my main assumption was that we are in the descending triangle, and I connected these tops, these four tops, and connected these bottoms. As you can see, we have a triple bottom pattern right here. We have the very good range of support from around $80.64 mark. And this is the descending triangle that usually breaks to the downside. And that is why my main assumption was that we should retest it, then we should have a rejection, and we should retest the lower rand, the lower border of this formation. And it is happening right now, as you can see, and definitely this price action shows how powerful the technical analysis is and how you can pretty much predict the movement of the certain assets with a very high probability. So let's continue with the fundamental news. Why this asset, despite its quite good earnings report, as you can see, they beat expectations by 13.44% on earnings, and they missed the revenue by 0.23%. And despite this quite good earnings report, we still have this harsh rejection that during which this asset lost about 10.6% of its value. So let me show you that we all know that previously Alibaba disclosed some information about their potential spin-off. And let me show you this article. We are on Motley Fool, and this article was published on May the 20th, and it's titled, "Is Alibaba stock a buy now?" And the key bullets are following. Alibaba's Q4 earnings exceeded analysts' expectations. It's spinning off its cloud unit in an IPO. Alibaba's stock is cheap, but it won't command a premium anytime soon. So, and let me show you this section. What are Alibaba's plans for the future? Back in March, Alibaba revealed its plans for future by splitting its business into the 6 groups: Cloud Intelligence, Taobao, Tmall Commerce, Local Services, Now Smart Logistics, Global Digital Commerce, and the Digital Media and Entertainment Group. All 6 groups will be led by different CEOs, and most of them will either pursue fresh funding or IPOs. And definitely, when the company reveals these plans, it might be a quite good opportunity for the existing shareholders to add more value to their current stocks. And let me show you this article. It was published on May the 20th, originally on Bloomberg News, and it's titled, "Alibaba to exit cloud business after Beijing undercuts potential." And let me quote this. Chief Executive Officer Daniel Zhang dropped a bombshell Thursday when he unveiled the contours of Alibaba's historic 6-way shakeup for the first time. Included among the listing and financing of a plethora of business was a plan to fully relinquish control for the business known as Alibaba Cloud. A once thriving operation that harbored the potential to supercharge the company the way Amazon Web Service grew to signify Amazon.com Incorporated. And definitely for now we have very good news in general that they will make this spin-off, but with the high involvement of Chinese Communist Party in some kind of management processes inside the big tech companies, with their crackdown policy and other potential not the best things from the democratic standpoint, definitely it brings more cautious on the table for the medium and long-term holders. And here is the screenshot, here is the picture of the potential split of Alibaba. And as you can see, the main part of their business is still China commerce that holds about 69.5% of its value. Then it has cloud intelligence with 8.7% stake, international commerce 7.2% stake, digital media and entertainment 3.8%, local consumer services 5.1%, and logistics 5.4%. And definitely this spin-off brings more opportunities for the shareholders, but it consists a lot of risks from the Chinese Communist Party. And that is why the recent updates on marketbeat.com website related to the price targets of Alibaba is not the best one. As you can see, since I made my previous video, we have 4 companies that upgraded their forecast on Alibaba. It is HSBC, Citigroup, Bank of America and Robert W. Baird. And all of them lowered their price targets, but they set the price targets from the ranges of from $115 all the way up to $144. And these ranges are still very lucrative in the medium and long-term perspective, because they give us an opportunity of from 34.08% all the way up to 67.89% of upside potential in the medium-term perspective. But if we take a look on the list of institutional investors, we have mixed filings, and some companies added their positions, some companies opened completely new positions, but some companies reduced their positions like JP Morgan does, and that is why, in my opinion, this asset cannot break this range of resistance, and that is why we have an opportunity to see lower targets, and we might see even breakout below the $81 mark. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, from the technical standpoint, I have to say that we don't have much new data, because we are still inside this formation. And I marked these levels a couple of weeks ago, and we still have the possibility to break it to the downside, because in general this formation is quite bearish. And that is why if the range of roughly $81.6 to $80.8 breaks, definitely the next range of support will be the $73.3. It is the bottom of this previous swing low. And the 0.786 Fibonacci retracement level if I pull this tool from this bottom to this top. And these ranges might be the next potential ranges where we might see a bounce. And I have to say that in order to confirm the movement to the upside, we have to see very good reaction to the upside that should increase this volume, this bear volume that we had on May 18th. And with this confirmation, we have to break several previous swing highs. And when it happens, definitely it will be a major bull run, and this bull run will imply very lucrative potential profits in the short and medium term perspective. So for now, I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys and girls next time. Bye!
I got the cash in the bag, stadium